This is Christopher Lewis from the dailyforex.com, a trading desk. Take a look at the upcoming February 27th Forex session, and in front of you is the dollar yen pair, which for the longest time has been a pair that most people had ignored. But quite frankly, now it's the hottest game in town. As you can see, we've had several sessions in a row, and we've had an extremely, basically just parabolic move. There's really no way to say it other than that. On this chart, I do have the blue 200-day moving average line, and I will go ahead and zoom out here for a moment, and you can see how this has definitely kept price below it for quite some time. We get the occasional spike higher, but as you can see, as far as separation from the 200-day moving average, this is about as far as we've been since probably the beginning of 2010. So this does suggest that perhaps there is something to this move, and certainly by now, I think the whole world knows that this pair has definitely changing its attitude. Also of interest, and I will zoom back in, is the 80 line, which on the weekly you can see it's a little bit more clear that it has been significant support. Looking at this, it does look like this is a serious break higher. Now, we can draw a line here at 85, and you can see that this, again, I'll go to the weekly real quick just to get a little bit better scale. You can see that this is an area of interest. So my suspicion is that we are going to make a run up to 85 before it's all said and done. Now this is predicated on whether or not 80 holds as support. You can see that several times recently it has held as support, and then of course resistance at one point. So essentially what I'm looking at is the classic breakout. Do we come back, retest it, and continue? With the Bank of Japan expanding its bond buyback programs, it's essentially flooding the market with yen, and it will kill the value of the yen given enough time. We've seen this movie before with the Bank of Japan, and it must be said that the Japanese are very, very shall we say, resilient when it comes to this. It takes several attempts, but eventually they can get the market to turn around. The Friday candle was absolutely ridiculous. 120 pips straight up, closed at the highs of the session. I suspect we're going to have a little bit of a pushback from where we're at. So now the question becomes, and the reason I say that is, as you can see, there was that was the high right before the latest fall. Question becomes is, do we blow through it, which of course is possible, or do we pull back a little bit, and does 80 hold? 80 for me is the key. As long as we're above 80, I want to buy dips, and truthfully we could fall probably a little bit below 80 as well. I just want to find some type of supportive action. The 200-day moving average will be important only because so many traders do pay attention to it. As a side note, the 100-day and the 50-day look something like that by the time you get drawing them on. So we're starting to change trend based upon moving averages. And quite frankly, as steep as parabolic this move is, yes, it should pull back. Yes, it needs to rest, whatever. But this is a very impulsive move, and this shows a massive changing of train of thought. With this in mind, I truly think we are starting to see the beginnings of a trend change in this pair. And this pair will quite often trend for 3 to 4 or 5 years at a time. So if you get in, you get early, you get often, this could be a career changing type of trade coming up for many traders out there. I have to admit I missed most of it going up to 80 because quite frankly I thought 80 would stop it, and the fact that it blew right through it as pretty much effortlessly as it did was a bit of a surprise, I have to be honest with you. The fact that it did do that shows the ferocity of this move, and I think we are going to see yen weakness going forward.